Welcome back, guys. I've got a very special guest for you today. It's a long-awaited interview with Phil Anderson. But before I get into who Phil is, how and why I found Phil, and what he could do to help you with the knowledge and the wisdom that he's accumulated over the years. Basically, I've seen it as the holy grail to the investing game. So I found Phil's work a few years into taking real estate investing serious. I always wanted to know when to sell. Everyone in the game tells you when to buy, but I wanted to know when to sell because obviously selling, we can take some profits at that point. And so I've been following Phil for over a decade. I found his cycle and it made a lot of sense to me. And the calls so far have been absolutely on point. People are fearful. Phil's been there to tell us it's not so bad. This is not a book tour of a new economist coming out doing all that sort of jazz, telling you the world's crashing. I've been hassling Phil for a long time to do an interview. He's kindly agreed. So who is Phil before I bring him out? Australian economist, a major in accounting, over 35 years in the investing game, author of the book that I bang on about all the time, Secret Life of Real Estate and Banking, world leading authority on Gantt cycles and analysis, and co-founder of Property Share Market Economics, a world authority in property and stock market analysis for savvy investors. They're all my words because I've been following it for a very long time. So without further ado, here is Mr. Phil Anderson himself. I'll let him say hello.
Yeah, hi Jason, how you doing?
Awesome. Excellent.
Good.
Thanks, Phil.
Good. Me too.
He is very excited to be here to join us
Yeah,
as well.
yeah.
All the way from, are you in Jakarta?
I'm in Jakarta at the moment. Yeah, nice and nice and warm here. The city's great. The people are great. The country's great. Although I travel a bit, but I've just found Jakarta seems to be the place that resonates with me most.
Because you have a few homes.
I do, yes. Yeah, France, UK, one in Melbourne.
France and Melbourne.
Okay.
All right. Well, yeah.
Yeah, okay. It's very odd, I in Jakarta here. Jakarta is on the Java Sea. As you know, the Java Sea rises and falls in 18.6 year segments, 9.3 years up to its highest tide. This is 9.3 years down, lower. Remarkable, really. That's why I came to Jakarta in the first place, to study this phenomenon. Because it was.
Is that real?
Yes.
Is that true?
Yes, absolutely. It does. And if you type 18.6 into the NASA website, it'll come up with the regular tidal effects, which is done by the long cycle of the moon as the moon and the Earth turn around the sun. I won't go into that.
All right. We won't get too far into the astrology stuff because people.
No, planetary, not astrology.
Planetary. I've heard many times before astrology is TA for men.
No, there's nothing esoteric. It's the way the sun and the Earth move around the sun, and
nothing esoteric.
The tides move accordingly. But we shouldn't start. That's getting away.
We're getting too ahead of ourselves. We need to know if the world's going to come to an end this year, if the 18.6 year cycle actually works. How can it not correct itself? How can we use it to make the most money we possibly can? There's a lot of questions from all of the members. And before I get too far ahead, Phil, I'll mention links to all your stuff are in the description. I bang on about your book all the time. Links are there. Yes. Twitter, the website, Property Share Market Economics. We'll talk more about that throughout the video, but let's crack on first with what is the cycle and how does it work for everyone who has just heard about it now?
Yes. Well, I was sitting with my family in 1990 odd in Melbourne, and we were approached by. We ran a profitable business that tended to do well in downturns.
And what was that business? I know what it is, but it's interesting.
Embroidery and ladies' lingerie. But for some reason, women buy more lingerie and lipstick in a downturn, which helps our business. Not to be flippant about that. Embroidery is one way to make a garment look more expensive than it is, and you can add that to lingerie and other sorts of women's clothes, And it seems to do well in a downturn because you can make something look better for a lower price. So again, it's nothing.
Value add.
Yes, yeah. So we tend to do well in a downturn. Sometimes we knew a little bit in advance if things were getting tight because women were or are reducing their spending. So in the 1991 downturn, it was really serious. For those, you've sort of got to be over about 50 something now, I guess, to remember it. But the downturn of the very early 1990s was quite severe around the world, but more so in Australia. And it was worst in Melbourne. Unemployment went above 12%. In fact, it was probably closer to 15%, which is an economist's definition actually of a depression. But the government back then, the Labor government, did everything possible to keep people off the unemployment queues by trying to retrain them. So we were approached, because we had a profitable business, and all the banks, Westpac, NAB and others, they went through their portfolios to see who could continue to pay their loans. There was nothing nice from the banks. The banks were in trouble. So they foreclosed any loan that couldn't pay. They called them in, which put people into dire straits sometimes if you couldn't maintain your payment. So we had a decision to make because we were offered some real estate, which I won't go into because it's more personal than anything else, but it was sizable. We're talking 20 odd commercial buildings. Reasonable.
You were offered this to purchase?
Well, yeah, to keep the loans sustainable. It's the only way the banks kept themselves afloat. Okay, that's all I'm going to say. So I was reading at that time Fred Harrison's book called The Power in the Land. That book by Fred was published in 1983, and it forecast that the world would go into severe recession after the peak in 1989. And here I was reading the book in 1990. Astounding, actually. It was a tip-top forecast. It was bang on for the year, and I thought, there's got to be something in this. So,
but he wasn't calling a depression every year before that, like we see with a lot of other economists.
That's correct. In 1983, when he published the book, he said that the UK and the world economy would absolutely boom into 1989 when it would peak. So it was a call of 7 years in advance. This is obligatory reading for anybody that wants to understand the cycles. It's a little heavy, but nevertheless, that was the first book of its kind, really. I needed to research that because the family made a decision subsequently to purchase all the real estate. That since then that real estate's now gone up. It's up 1,000%.
Wow.
It's you can't even value it these days. It's. Anyway, I won't go into it. Right, so
there's a lot of real estate worth a lot of money.
Yes, yeah. So I won't go into it anymore. So I thought then that I thought I'd probably have a part-time business I could run, telling people about the cycle because I'm an economist and stuff. So and I did want to run my own business eventually. So
how did you find that book at first? So people are wondering, how did you first learn about it? And then what is the 18.6 year? So why were you reading Fred Harrison's book at that point?
Oh gosh, I traveled around the world in 1985 and 1986. I backpacked around the world for about 20 months, right around the world. Started off in Europe, went from Europe. This is before the wall came down. So we're talking in Eastern Europe, the old communist countries. Then I went into Russia. I caught the Trans-Siberian from Russia into China. Then from China went through into the Himalayas. We walked around Mount Everest into India. So we were at a height of about I don't know, it's about 6.5, almost 1,900.
I think people are probably thinking, why did Jason ask that question?
Yeah, well, because I went around the world because I decided. When I was at school at university studying economics, nobody could tell me why things were like they were. I was studying what was called the Phillips curve, which said that you could only have unemployment high or inflation high, but not both. And in the 1970s, unemployment was high and inflation was high. Absolutely nobody could explain it. And when I got back from all my travels, I ran into a study group about Henry George and David Ricardo. And one of the guys there said, if you're interested in forecasting, you should read this book from Fred Harrison. I did, and the rest is history. Then, so I decided after that to start my own business that I would research the United States because Fred had done the UK, and I thought if this truly is a cycle, then since the US is now the world's major economy, if the UK can do this sort of cycle, then the US has to as well. If I found the research in the US, then I'd be off to running a business and selling the research into the US because that's where the money is. And lo and behold, I discovered that the US has a very regular land speculation peak every 18 years, and it's been practically month perfect since 1955, Second World War. How good is that? So I was ready for, after all of our property stuff in 1991. Once I got into the cycle, 1995, 96. It was clear if the history was going to repeat that US real estate would peak in 2006, the stock market would peak in 2007, then we'd have an almighty crash. Jason, I was ready for that crash. I knew that was coming. I can't stand up publicly and say that because people think you're just another idiot giving another forecast, which is a dime a dozen these days, right? But we have to be humble about these things because I walked into the Westpac branch in Lygon Street, Melbourne in 2007. The bank manager there was happened to be a woman at that time, and I sat down and we had a discussion. I said, markets are going to crash in 2008, 2009. Please make sure all my funds are ready so that I can do some buying, right? So you have to be humble because it worked out that way for practically the rest of the world. But in 2009, the only market in the world that went up was in Melbourne. I think it was all the Perth people buying up because they were still having an outrageous time with China buying up commodities. So
for people who weren't following, that was WA had a mining boom, and
Yeah.
so they had their property was crazy for that whole period. And It was one of the only places that didn't go down.
That's correct. Yeah, parts in Canada as well were the same. So you have to be humble about these things. That markets have a habit of never quite working out exactly how you think, but nevertheless, this 18.6 year cycle, if you can see the stuff behind it, which we should get into next, it's an incredibly useful, valuable way of. It tells you the structure of the economy, and it's a very handy, valuable way of working out how the economy actually works, and then sort of having a decent idea what might come next, And so we got into 2011, 2012, and 2013 when you might recall that absolutely everybody was still suggesting that things were going to crash. The US dollar had it, and the euro was going to collapse. The European Union would disintegrate, and here I was telling everybody, no, we're at the bottom. Real estate has had its low. If history is to repeat, it's been from about 2011, 2012. Now we're talking real estate here, not stock markets. After 2011, 2012, if history was to repeat, then US land value would continue going up for the next 14 years. And then we get 2019, 2020, then we have the pandemic, and absolutely everybody in 2020, every economist anywhere, come out and said that absolutely everything's going to collapse, property's going to collapse. You were there, you saw that, right? And here
I even saw the Tony Robbins, all the biggest guys worth billions talking about it, 30, 40, 50% collapses.
Yes, exactly right.
They all went quiet.
Yes, these guys don't understand the structure of the economy. And the structure of the economy is based on what's called economic rent. Economic rent is just basically the earnings of land. Absolutely everything in life is based on earnings. Now, and let me give you just a brief example of what I mean by that. Everybody at some point, you have to know what you're worth. Yes, and if you run a business, particularly, I don't know, say you run a hairdressing business or you run your own accounting practice, what are you worth in monetary terms? What's your business worth, or what is it if you're in your own company? What are you worth for somebody else to buy you? And the way economics and accounting and markets do that is based on yearly earnings. And then you have to decide upon what price you're prepared to pay to buy those earnings. Yes? And so land has an earnings rate as well. Generally, it's about 5% a year. And so if you were to lease out your land in the middle of the city, to work out what you've got to buy that piece of land for, roughly the price historically is about 20 times earnings, roughly. Now, over time, some years, people are prepared to pay more for those earnings than other years. And depending on how generous a bank can be, they might lend you money these days for the purchase price, which if the bank's in a happy mood, it'll lend you more money, which of course, as we know, if everybody can borrow so much money, that tends to put the price up. So you have to pay more for the same amount of earnings. Yes. Now that when those earnings capitalise, when we start paying a price for the earnings of land, you must get a real estate cycle. And when you understand that, and when you can see history, and the history I show in my book, it becomes.
There's a lot of it in there.
Yeah, there is. The history's in there.
200 plus years of it.
Yes, and I demonstrate then some of the statistics and then all the indicators you can use to help you forecast where you are in the cycle and how the cycle is going to work. It then, once you understand that from an earnings perspective, it isn't very hard then to start understanding how the economy actually works, and then to actually start to forecast what's going to happen next. I mean, it can, if you get that, it can bring you a remarkable peace of mind, because you don't have to then start listening and be affected and have your emotions going up and down by what everybody else has got to say.
I can hear the questions starting now, like putting the cycle first and not worrying about the interest rates and the Fed. It's like all the sort of latest news at the moment. The Fed's going to raise interest rates, and that's going to affect property, and property has to crash because the interest rates are going up, et cetera, et cetera, et cetera. I think it's a good point for people who are still new to the cycle to understand what you're talking about when it comes to the economic rent, and that affects the 18.6-year cycle, and then look at it from the perspective of the broader picture rather than the day-to-day Fed said this, Fed said that noise.
Absolutely. The Fed, the President, the United States, the governments around the world, they are endogenous to the system. Now, endogenous means they're all within the system. Anything within the system isn't the catalyst, doesn't cause things to move very much, right?
Big point. Yep.
Yeah. So, the Fed these days, particularly since the Second World War, I think people can see this now, it's been demonstrated. The Fed doesn't want things to collapse. So they do everything possible to ensure that it doesn't. Now, clearly, if the Fed president decided today that he was going to lift interest rates 10% overnight, that would be catastrophic. But it's not going to happen, because the Fed is there to preserve the system. And so they'll do everything to preserve the system. Once you know the cycle, and once you can see the history, you understand that the cycle is related to earnings. You understand that you understand the law of economic rent, which means that all of the social progress that happens, all the benefits of society, in the finish, capitalise into the rent. Then land price just keeps going up and up and up and up. History shows that after 14 years going up, if the banks get really greedy and start creating too much credit and lending too much money, history shows it's a 14-year process. Land price will eventually go too high for the productive part of the economy, that's business and the workers, to afford it. And that's when you start getting things really difficult, and usually after that there's a crash.
And I can hear the questions. So what is the 18.6-year cycle? 14 years up, 4 years down, roughly speaking. That's the average, and we've seen them as short as 17 years and as long as 23 years from
21 in the US.
21.
But since the Second World War, they've been remarkably consistent. And US.
What happened before the Second World War? Why weren't they consistent?
Because.
And can that happen again?
No.
That's what people are looking for now because of the wars. But I've got more of those questions coming up as well.
No, there are plenty of questions. Yeah. In the 18th and 19th centuries, government the economists had a belief that governments had to balance their budgets. And so when things turned down, governments and the banks, their behaviour generally made things worse. The banks would call in all the loans, and the government would attempt to balance its budget by not spending anything more. And so that would be a double whammy, sometimes a triple whammy, which would actually tend to make the downturn worse and would last the usual 4 years. Since the 1930s, when John Maynard Keynes came along and said the government can be more proactive in the economy, since the Second World War, governments have been spending a lot more money, spending more into the economy, which the banks by issuing bonds, which the banks then lend the money to the government, and the government spends that into the economy. This is.
So you're saying that's a good thing, creating money?
No. That's another topic.
We've got a lot to get through. We're only in the intro so far.
Governments are more proactive these days, and when things do start to turn down, they've worked out that governments can spend money into the economy when things do turn down. So it has so far ameliorated the extent of what the downturn should be. Stock markets pick up on this pretty quick and are fairly quick these days to have a very quick tumble, but then a very quick move out as well.
Yeah, we saw that in 2020. That was just straight down and straight back up. So how's that going to affect the cycle then? Won't that affect the cycle?
2020 was mid-cycle. So let's not confuse our end of cycle extreme with the mid-cycle.
So the end of cycle can still be that 4-year period from the peak to when?
For real estate, yes, but stock markets recover quicker now. Okay.
More liquid than real estate, which is why it's quicker in the stock market.
Yes, markets are a lot bigger in those too.
So that leads me on to what are some misunderstandings about the cycle you've heard over the years? That's a misunderstanding that I've had myself. Stock market, property market, what are we talking about? The stock market always recovers, but the property market might peak earlier or later. Exact dates for the cycle, some things I hear, and can we time this sort of thing?
Let me suggest this. The cycle we're talking about, 18.6, it applies to real estate. Okay, it is not something for the stock market. One of my specialties over the years is that I do both. I've been a specialist studying real estate, but my passion is actually stock market. Over the years, generally, I've found that people are one or the other. They're usually interested in the stock market. If they do all the stock market, they don't do property so much, except buying their own house perhaps, or one house investment. If you're into real estate, generally real estate investors don't study the stock market. You seem to gravitate to what your emotions are best at, really. And a lot of real estate investors, they don't like the stock market the way it goes up and down so quickly, right? It's very hard to deal with emotionally. Whereas, your real estate's much easier to look after, really, in a way. So,
except for tenants, but
well, yes, obviously, tenants, create can be your biggest problem.
I won't distract us from the point here.
What I've been able to do, and what I always tell my members and subscribers, is that if you're a real estate person, you should at least attempt to understand what the stock market does and what it's about. If you're a stock market person, you should attempt to understand real estate. Let me tell you why. If you're a real estate person, you should understand the stock market, because at the bottom of real estate markets, when we get to lows, it's always the stock market that leads the real estate market. So you can actually use your knowledge of the stock market to help you as a real estate investor identify the low points before other people see it. That can be very good, can enable you to make some better buying points, because after all, the profit's in the buying, it's not really in the selling. If you're in the stock market, I ask stock market people to understand real estate, because at the end of the day, what drives the cycle overall is the enclosure of the economic rent, or in other words, the capitalization of the land earnings into a price. And at least I don't have I don't have official figures, but I reckon probably anywhere between 30% to 50% of all stock markets are basically rent. That is financial stocks, real estate stocks, banks, and other things that are effectively just lending against economic rent. Land value. People see it as house value these days, but it's just really rent. So depending on which investor you are, you should really understand the other side of things. And that's what I try to get people to do. And so at the extremes, which is what we're interested in overall, when property bottomed in the US through 2009, 10, 11, the stock market was already up. By 2012, by 2013, the US stock market was already making new highs. That was telling you that the cycle was well underway, and it was telling you that US real estate would recover over the next 4 to 5 years. Yes, that's very handy information to know. It means
why don't more people see this? Why don't more people see this? It seems simple, talking about it like this.
Yeah, it's a good question. More people don't see this because, and I appreciate you asking that question, actually. It gives me a chance to explain it. More people don't understand this because the economics profession has been quite deliberately corrupted. Actually, the Shepherd Waldman publishers who I've dealt with over the years quite extensively, they're the people that published my book. They have a book coming out, an ebook of an old book, actually. Ebook's coming out next month. It's called The Corruption of Economics. In that book, Mason Gaffney demonstrates the 4 or 5 economists that were employed by the very wealthy men back in about late 1890s, the early 1900s, to deliberately write out of economics Ricardo's law of rent. It was totally deliberate. Mason Gaffney has completely demonstrated this in that book. It's well.
So it's not tinfoil hats, conspiracy theorist stuff.
No. It's just the rich, the people who own most of the planet. They don't want you to understand how easy it is to claim the rent and to buy it up. But they don't want the competition. All the people sitting, the lords, the Duke of Westminster and all the others, bless them. They don't want land as such. They don't want this highly visible, because if it was made highly visible, then somebody would come along and suggest, well, why don't we tax it? Because then government could raise revenue. In fact, government could put itself out of business by taxing the rent as revenue, create a citizen's dividend, and we'd all be far wealthier than we are. Yes. So the idea
that's another topic for a whole conversation. But I'll leave. I know you've got an ebook on that. It's a free ebook. I'll leave a link to that in the description as well.
Yeah. Corruption of Economics. Yeah, it's not published yet, but
no, the citizen's dividend ebook.
Yeah, citizen's dividend. Yes, okay. If you really want to understand what it's all about the earnings and about what significance of what it means, my citizen's dividend book is a really good one to read. See, I just say this, there is a vested interest that doesn't want the economics profession to understand economic rent. And it's just, I'll just explain it simply this way, to say that economic rent is to economics what gravity is to science. And if gravity had a vested interest, in other words, if you could make money from gravity, or if you could make money from enclosing the sun, the gravity would not have been invented yet. Okay, so it's just simple as that. Because it's just a vested interest. There's no conspiracy in it. It's just that it's just the way the world works, right? So that's great for me, because I can stand up and explain the 18.6-year cycle and everything else. And I absolutely know I'm not going to get a lot of competition from other people trying to explain what the 18.6-year cycle is, because once you start explaining it, it leads to the obvious conclusion that we should be taxing land for a better system. And who's going to come out and say that, Jason? Who's going to come out?
Politics, definitely not.
No, because the land tax is the most hated tax in the universe for obvious reasons, because you can't shift the land. You can't take it with you to another country, right?
It makes complete sense to me now that I've read it so many times, but for someone new, it's kind of like, not more taxes, or some people really love taxes and they want all people. And I always just say, you shouldn't be taxing productivity. It's like, you shouldn't be taxing the people, tax the land, which is what I've got from you as well.
Yes, that's correct. Well, I don't go out and advocate all of this. I just try to.
I'll do it on your behalf.
Yeah, I just try to show people, if you understand what economic rent is, you will then understand the structure of the economy. You will then be able to reasonably accurately forecast what's going to happen next, and make money without too much emotion, and do well. And that's great. A lot of my subscribers, as you know, done very well out of this. I get emails all the time, every day, from people saying how well they've done and how thankful they are that they've come across this. But my number one feedback is, Phil, why didn't I see this 10 years ago? That's my number one feedback.
I reckon Harry Dent should read your book again. I know he's written the piece on the back here, but he's still out there. Anderson's book, 80-Year Cycle in Real Estate Throughout the Last 2 Centuries, is simply the best book on long-term real estate trends we've ever seen. Why the hell is Harry still saying the world's going to collapse? I don't know.
Oh, there's more money. You get more followers.
There's more money. More money in negative news.
Yes,
I think that's...
So don't go down that rabbit hole. Okay? The world's the world's a wonderful place overall. I know there's trouble in various places.
Russia, Ukraine, that's the big thing that was happening right this minute.
Government's just making things far worse. That it's in Mr. Putin's interest to create a disturbance, because his tenure is becoming tenuous because more people don't like him in Russia. It's in the interests of American government, because they want disturbances, because their military, they can pay more for their military. They can put more troops in Europe now, which Trump was taking them out. It's in just don't get me started on.
All right.
Don't get me started.
Well, we'll go. I've got political questions later on, but I want to have a look at some member questions. So my members, I've been talking about it for ages, guys on YouTube, viewers. The first one I have here, because it's kind of the main thing that people ask first up, they're all from different places around the world. Will it be different in Australia, the US, UK? Which countries doesn't the cycle apply to?
Yeah, that's a fair question. I study the American land market, America as a whole. Now, America is 50 different states. So let me put it this way. Just simply understand the cycle. America is the largest country on earth. It affects everything else. Its bond market is even bigger than the stock markets. Its banks and everything else, they're the largest in the world. You have to know the real estate cycle comes out of the US. What that does, it allows you to then understand the structure of the economy. And after all, the US leads. So just work out what's happening in the US. Now, the cycle will apply to any country that encloses its real estate and where banks are permitted to create a mortgage based on the land and house price. So Australia will see a cycle, the UK will see a cycle, China will see a cycle now because it's enclosed its real estate. So any country that does that will see a cycle. But China's banks are not really part of the Western system yet, so they're still a little bit independent. Australia has so few people and such a big land mass that I would suggest, really, in one sense, the Australian speculation would just keep going ad infinitum if the US wasn't there. But because the US is the biggest market, whatever happens in the US, Australia is going to follow. So if the US has a significant downturn, Australia is likely to feel that, because we're a big trading partner with the US and we're all affected. And if the Americans and the banks stop lending there, then the banks in Australia get nervous and they'll do the same. America leads the cycle. That's why you have to look at it first. Generally, historically, since about the 1930s, my research, and I showed it in the book, Australia tends to follow what the US does about 12 months behind. That's why it's worth understanding the US cycle first, because once you see what's happening in the US, Australia will tend to follow. So if you understand the US, it gives you a bit of a warning signal about what might come next. Australia is not going to see a significant downturn unless the US turns first. It's as simple as that. So Australia's got nothing to worry about whilst America continues to boom. History shows, and I showed this in my book, history shows that US has a very regular 18 to 20 year cycle. It comes out at 18.6 for various reasons, which we might get into later. And so you can basically time that. I've been saying very clearly since a long time now, decades, that after 2008 downturn, we'd get 14 years of rising property prices. It bottomed in 2011, 2012. 14 years takes you to 2026. This is not hard to work out. And so far, since 2012, the past 8 or 9 years, as you know, if I may say so humbly, I have been bang on. Yes, it's quite,
Bang on.
all the stuff's there on my website. You can see that for yourself. And so I don't see any reason why the cycle won't continue to turn. It's behaving like it should at the moment.
I've got a few questions on like how the cycle can break, why it would break, all that sort of stuff. These ones are mostly about, will it be different in Australia, US, UK, New Zealand? I've got viewers in Europe. What about some countries?
It won't be different. It won't be different.
What?
It won't be different. The US leads the cycle.
Timing?
US timing. And US is going up. History says property prices in the US will go up 14 years. They bottomed 2011, 2012. That'll take you to 2026. The only thing that could disturb that, there's two things that can disturb that. Number one, the American government introduces a land tax. And since we've had President Trump in the White House the prior 4 years, I don't think he's likely to introduce that sort of phenomenon.
Mm-hmm.
So that's out of the question. The other thing that does upset it is a world war. The First World War into 1914, that stymied, that meant that we didn't really get a big peak into that particular cycle from about 1910, 1914. Everybody went off to war. The Second World War affected the cycle in the sense that nobody could speculate in the 1940s, so you couldn't have a big boom into the 1950s when the top was due. Could we get another war? Any time, obviously. I don't have a crystal ball on that. Things look a bit grim at the moment with sort of.
But it's got to be a world war. It's not like a China versus Russia versus Ukraine or something.
No. If anything, if we get a conflict there, if anything, I think that would add to what this real estate cycle could do. I think it would make the real estate cycle bigger, if anything, because the US will massively ramp up their military side of things. They'll produce more weaponry. They'll have to replace what they destroy. They'll print more money to pay for it all. Odds on then you'd probably get a lift in inflation. If you get a lift in inflation, then asset owners and people who've got money, if inflation's higher than the interest rate, which it is and which is likely to stay that way for a while, then you can borrow at 2% or 1% or 3%. Your asset goes up at 5 or 6%. That's a no-brainer, isn't it? You have to borrow money that way, right? So because your asset's going up more than the cost of your loan. I mean,
So that's part of the next question's asking, how does the cycle keep working? Credit creation, economic rent, but mostly credit creation.
Well, the enclosure of the rent creates the cycle, but what actually determines how high the cycle will go is how much credit gets created by the banks. And as it's been detailed before, hard to believe.
The question as well, like the banks are creating a ton of credit now. I always get that come up. I'm like, yeah, but it's nothing like 2005, 6, 7. I remember it was just 107% loans, like all this sort of crazy stuff.
25%. It was absolutely totally full on.
125%.
Yeah, you could go to was it the Newcastle?
Do you think that'll happen again?
Yes, but not in the same form. As the cycle heats up, as land price goes higher, it means banks can create even more credit. They love that when that happens, and we are due a land boom if it hasn't started already. So the banks will create even more credit.
So even more than what they have now. So to I guess answer the question of, well, there's a ton of credit being created now. Why aren't we seeing, the top of the market? Couldn't this be the top of the market?
The earnings figures don't suggest that would happen yet.
The bank earning figures.
Well, let me give you an example. I don't always know about Australia, but one of the investments I have in the UK, I've just remortgaged I can have a what is it? It's a 2-bed, 1 reception flat, terraced. I can collect £1,100 a month rent. My mortgage is costing me £400. House property price is going to collapse when you can do that. So the earnings is way above what it's costing me.
So that's part of your economic rent, because that was a difficult theory difficult point for me to understand when I first came out. Like, what do you mean by economic rent? It's basically how much does that land produce?
Yes. Now it's got a house on it.
Yeah.
The land is not the house. You can divide the difference between the house and the land, but I wouldn't get hung up on that too much. Just treat it today as one and the same. It isn't from a strict economic viewpoint, but from an accounting point, it is. If you can buy a house and you can get £1,000 a month rent for it, and you can pay back the bank £400 or £450, or if it's not an interest only loan, it's going to be £700 or £800. Isn't that a no-brainer to be doing? That's what everybody does.
So basically, until it gets above that and then into heavily negative gearing, I don't know if that's a term over in the UK, but obviously here in Oz, that's when stuff starts to go wrong, because you're then having
start to happen by interest rates rising, or house prices coming down a little bit, or not going anywhere to cover an interest payment, and you have to then have a situation where you've got a lot of borrowers being pressured by interest rates rather than still owning the house outright. So we're not anywhere near there yet. We've got another half a decade to go yet before anything starts to happen like that.
I can't believe that, half a decade, even into 2026. All right.
So then, we've seen nothing yet.
We've seen nothing. What?
Go back. Remember, look, I can remember late 1980s. 86, 87, 88, 89, when the stock market crashed in 87, absolutely everybody started buying property because they just couldn't stand the emotion of the stock market anymore. 2005, 2006, 2007, do you remember when Paris Hilton was cavorting around and everybody was focused on her glasses?
It's all on TV. Yep.
Yeah. Yes, and we were borrowing as much as we could. And, you go to the Newcastle Bank in England and the bank would give you 125% of what the house was worth, right? So you could get an extra 25% just for walking in the door. We'll see what happens next, but I think these things haven't happened yet, so we'll see.
That's something to add in at the end of the compo. Well, yeah, I had some other points like, what are things that we should look out for and how do we use this info? But going on with more of the questions, because it's in everyone's mind now with the interest rate hikes in the US, everyone says the interest rates are about to go up, therefore that should crash the market right now.
They are about
crash
to
go
it. Up. But we need to differentiate for the reason why they're going up. They've got to normalise. They're too low, so they have to normalise, and that's what they'll do over the next year or so.
Won't that crash the market? No more money printing. That's all that's pushed the market up so far.
And it will affect the stock market, but it won't affect what property speculators are doing yet, because a lot of the loans will be fixed. They'll be fixed 3, 4, 5 years. So an increase in interest rates won't affect things for another 4 or 5 years. Mortgages won't go up that much directly. The Fed will lift its rate. It won't directly affect earnings immediately of what real estate's doing, and it's.
But you think it'll take 5 years for it to affect it?
Interest rates are just going to normalise, right? So they'll just go up a little bit. And now
what's a little bit?
2%, 1.5%,
so
2%. And
1.5%.
Remember, once they go up, we've got inflation happening at the moment. Now, if there are corporations listed on all the stock markets, if they have pricing power, and if they can increase the prices of the products, which many can, their earnings will outstrip the cost of interest rate rises. Now, if the earnings of the corporations continue to go up more than what the cost of the money is, share prices must go up to reflect that. It's all about earnings. It's what it does to earnings. There'll be some companies, though, that might struggle a little bit with higher interest rates. If the higher interest rates for those companies affect their earnings and earnings decrease for those companies, then those share prices will decline. And that's precisely what's happening in the stock market at the moment. Corporations, mainly tech stocks, that have future forward earnings, when interest rates are higher, those earnings have to be capitalised at a higher rate, which means effectively a higher discount value, which is going to lower the value of the forward earnings. So tech companies and companies that don't have cash earnings, their share prices are going to come down, right? And that's been happening. It started already because the market knows this well in advance, right? But banks and some other corporations that are likely to make higher earnings as interest rates go up, the differential, their earnings will rise, their share prices will go up. You can see that happening in Australia, right? National Australia Bank yesterday was in the 52-week new highs list. Stock markets are not going to collapse when the banks are in a 52-week new highs list, right? So it's all about earnings. So
Yeah, I can hear the frustration.
Stop looking at other people's opinions. You should not be looking at an economist or a stock market person's opinions if they don't understand economic rent and they don't factor in land into their calculations. It's as simple as that. Otherwise, their forecasts and their prophecies and their prognostications are just going to confuse you. Earnings, study earnings.
Even some of the biggest property investors who have made their name for themselves, say Robert Kiyosaki, I love his books,
yes.
but still forecasting collapses in 2020.
Yes.
I thought they would have some more. What stunned me is why people don't have more of a grasp of a cycle, not a 7 to 10 year cycle,
Yes.
just an overall bigger cycle than that.
I tell you, but this is not going to sound very pleasant. Guys like Kiyosaki and others, look, they're not dumb. They're smart fellas, right? And
Totally.
I wouldn't denigrate them at all. But let me just say generically, and this goes for just about all real estate people that I've met. They're too smart. So they'll buy property and it keeps going up, right? So they start to get in a belief in themselves that they're really smart people, yes. But the real estate sector and land prices, because they go up so often for 14 years and only spend a year or two coming down whenever they do come down, the real estate investors, those guys, mostly guys, they start to believe that they're smarter than the market until one day they just get too overconfident. Real estate people also, when you own a couple of houses, it's really easy to just keep putting the rent up a little bit every time you've got a bit of an expense. And if you've got a tight market, like in some areas in Australia, Melbourne and others, or in some of the mining towns at the moment, just keep putting the rent up. What's the problem? Just do it, right? So you don't have to be highly intelligent to. Actually, no. Let me put it another way. You don't have to be. People who can do that don't spend their time studying markets to educate themselves.
I guess you could become complacent in your own.
Yes.
Yeah.
In
your own success.
Let me put it another way. Property markets cover up your mistakes mostly.
Yeah.
And so Kiyosaki and all those other guys, they can cover them like that. Yes. And also, might I say again, it does come back to the whole corruption of economics. A very thorough job was done on economics institutions, and let's face it, the big guys in the late 1900s or so, Rockefeller and Vanderbilt and all those others, they had, by today's standards, they had hundreds of billions of dollars at their leisure. They owned the universities. In fact, some of those guys created the universities, or they left their endowments to the universities.
Again, this is not conspiracy theorist.
Well, no, they're just acting in their own interest. Yeah. Many American universities are very large landowners, so they're not going to teach about land economics.
All right, I had a question on that too, so that kind of answers that. But finishing up on the last question about interest rate hikes, what happens if the RBA or the Fed raises rates? Well, to where we are now, 1.5%, 2%, is probably not going to make too much of a difference.
No, it
that
won't.
Could take.
Well, let me say it'll depend on what sort of business you're in. If you're in a business that's directly affected by what you've lent and it does lift your bottom line, your cost of money. And if you can't pass that on to the consumer or to the buyers of your products, that will reduce your earnings. So if you're listed, then earnings decline, share price must decline as well. But generally, though, at the moment, there won't be any problem in those things being passed on by corporations.
And so what we could see is tech coming down now, and then banking, developers, yes, land. Yes. And so that's going to confuse a lot of investors, which I'm already seeing. They're saying, well, the market's collapsing. Well, no, tech is collapsing, but yes, this other side is going up. But no one's interested in looking at banks, especially in my industry of crypto. And it's just not fun. It's not exciting.
No, I understand. It's slow, right? But,
boring. Banks. They're dying. It's a dying industry, that sort of thing.
Fast, slowly. Okay. I think you've seen you're right. You've seen Akhil Patel's work, my co-director.
Yeah, I had Akhil on the channel as well. Did a video with him.
He may well have shown you that in the second half of the cycle, the real estate and banking stocks outperform, and tech stocks underperform. Doesn't mean tech stocks can't go up; they just underperform relative to banking.
So you're saying the banks are going to do better than something like Tesla in this second half?
Yes.
Wow, that's going to be the title of the video.
Now,
Tesla underperform.
Yes. Now, don't get me wrong here. We're talking share price performance. Okay, we're talking return on the market. Tesla is a great company. They're going to produce lots of electric cars, and they'll sell, and they'll do very, very well. Yeah. So I don't want to say that
we're talking the stock price only.
Yeah. Yes. We're talking where the earnings are affected. Yes, and Tesla may still go up, but relative to the banks, I think they'll underperform. History suggests that in the second half of the real estate cycle, tech stocks underperform relative to the fire, insurance, and real estate sectors in the United States.
Yeah, and I'll just add to that. What was tech like? I don't think of it being 30. My 30s. The decades previously, tech was, what was it? Electricity, grids, railroads. Like, we don't think of that as technology anymore.
No.
But that was the previous cycles.
Well, yes, and so we're only talking since the NASDAQ was founded. We're talking since about 1971. Okay, so we've only got we've looked at three prior cycles as a definition of tech stocks.
Oh, okay, not technology back in the early 1900s of real estate.
NASDAQ.
Okay, all right, good to know. I was always thinking of the technology back then too, but good to know. I'm learning here. How do you see the internet impacting this cycle? Was another question. First cycle, the internet has been a part of from the beginning. Would this be the first cycle the internet has been here from the beginning?
Well, I was there in the beginning, 1995. When Mark Andreessen invented Netscape, and then Mr. Bill Gates bought him out, took him over, and then decided to give it away free with Microsoft.
You got one of the first emails, I think.
I did. I go back now, and it's probably one of my bigger regrets. I used to have my email address on the bottom right-hand corner of my business card. This was in 1994, right? I go around to businesses telling them that I had my own business forecasting, but they weren't interested in the forecast. They wanted to know what was on the bottom right-hand corner of my business card. What's this? Phil Hatt, right? Never seen this before.
Yeah.
And of course, other people cottoned onto it, and we had our first internet service and email corporations created so you could get online and everything else. That really drove the American market after 1994. It pushed the American market into all-time new highs. It fed the market, and up we went. It did the same. It did the very same after 2008. And I've said this many times as well. If you can learn to read a chart, if you can learn what stock market's all about, you would have known the stock market told you in March of 2009. The stock market told you that the NASDAQ was now the leader of the American market. And you could have known that at the time because in March 6, 2009, the NASDAQ made a higher bottom than what it did in October of 2008. It was the only index that did that. That's a bit of Gann chart reading. It told you that the American internet stocks were going to be very strong, just from a simple reading of the market because investors were not allowing the price of those stocks to decline very far. They were buying up at higher prices. And that told you that they thought those stocks were still strong and had a good forward outlook. And
That's
right.
That's something that myself and Michael on our channels talk to people about when it comes to, say, cryptocurrencies, because you're looking for the leaders and who are the stronger horses in such a fast speculative market. You're like, well, this one's bottoming higher when everything else is going lower. It's telling you something.
Reverse.
Yeah.
Reverse. It's the reverse now. The NASDAQ topped out in late 2021. The Dow had its top on January 5, 2022. NASDAQ still leading. Peaked first. It had a lower top when the Dow had a higher top. The NASDAQ now is looking weaker as the weaker market for the next year or two.
Would you say that for cryptocurrency as well, since it sort of peaked?
Probably.
Yeah.
Yes.
Not going to have those bigger gains into this stage of the cycle?
Probably not. Not yet. Okay. After 2022, we need to get through 2022 first. 2022, in my opinion, will be a difficult year for the stock market. Not for real estate. Real estate will be a good year still, but it'll be a difficult year for stock markets.
And probably cryptocurrency then?
Probably crypto as well, yes.
Yeah, and we might see some higher lows later this year, maybe lower lows. We don't know yet. I guess we got to. All right, we'll get onto crypto later. But so the internet, it's not really going to impact this cycle any more than what it has in the previous cycle.
No, same.
More volatility.
Same, just the same. It's just going to, very thing again. Anybody that creates anything new with the net, they'll float. They'll list. Very productive. Very productive. It's good.
It's not going to affect the cycle though, because of how fast information is flowing. No.
No. I demonstrated the book. There was when the 1873 downturn took place. The people blamed the downturn on the telegraph, because they said the telegraph was now disseminating information so fast people couldn't cope with the speed of the information transfer.
You need to post that one on Twitter and tag people talking about the internet. So that's 150 years old, and people we're repeating what we just said 150 years ago.
Absolutely.
The technology. After the property cycle peak, is the correction forecasted to bring land, they say house prices, but land prices lower than what they currently are? That's obviously a bit broad because of all the different locations, but people trying to figure out
History suggests that residential prices come down by about 30%, roughly.
From the peak. We don't know where that is yet.
Yeah, no, we don't know where that is yet. From the peak. Industrial stocks, commercial stocks, they can often come down by more, by half. And depending on where the most speculation takes place, there are areas that can collapse entirely. So to give you an example on that, in the 1990s, the early 1990s, Texas on the I-90 saw the biggest speculation. That was around Dallas, I think. Basically, they had hundreds of see-through buildings, right? Prices collapsed in some places down to zero for some commercial buildings, simply could not be gotten rid of. There was so much speculation taking place. Out in Denver, there was a lot of speculation taking place there. The plats, the subdivisions of all the land, they call it platting in the US, I think. The outer subdivisions just collapsed completely. Some of those things just couldn't be sold. They built 10 or 20 years in advance. El Paso was another area in the early 1990s. They built so far out, they platted land so far out that the real outskirts became utterly worthless.
And that will affect through to the next stage of the cycle, because if you have that much and we're saying, all right, here's the bottom of things going up, and well, my town isn't going up. It's possible that it's just way too much oversupply.
Yes, and it takes 10 years to digest that. I went back.
So they might even miss out on a whole cycle altogether, some of these places, if it crashes.
Certainly the first half of the cycle.
First half. Okay.
Yeah, usually it depends. And again, it won't recover unless they get better population growth coming back. And so usually what happens 6 or 7 years into the new cycle, a new governor comes in and he decides he wants to do something productive for the big city. So he says, all right, well, let's give away some land, or let's let's have some attractive tax bases so we can attract more people to the whole county or the whole area, and that generally gets things kicked off. San Francisco didn't have that problem because it's hemmed in on several sides by water. New York, the same issue. So you get a very quick downturn, but then a very quick recovery because you didn't have that.
It's landlocked.
Yeah, that's right. It's landlocked.
Oh, not landlocked. Sorry. Yeah, blocked by. There's nowhere to go. So that's
right.
a good point. Looking at where you are, if you're trying to use this information, like I'm on the Gold Coast, so you got nowhere to go. It's the water or the mountains on the other side, and
Yes.
you don't really want to go up onto the mountains because there's no infrastructure up there.
Yes. Yeah. So what the idea is, you understand the real estate cycle. That gives you the structure of the economy, and then after that you have to apply that. With some emotional and logical intelligence to the region where you live. Yes, and so if you live in a place that can expand forever, well, it's the last to collapse and the last to recover.
All right. What signals or signal warnings that you see to call the end of the cycle or tell you that the end of the cycle is near?
Well, that's very easy. Nobody ever notices. First up, there'll be a poster girl or a poster boy comes up in the next couple of years that talks up the cycle. I don't know, maybe it's Mr. Trump if he gets back into the White House in 2024.
You think that's a possibility? Are all the Trump fans going to get excited?
Things are so stupid at the moment with all this government posturing with Ukraine. It's just my opinion, my humble opinion, that I think the US is creating so much difficulty with Ukraine and Russia on the border at the moment because they don't want China to hog all the limelight with the Winter Olympics. Things are so crazy. It would not surprise me if in a week or two's time, Mr. Trump gets up and says, I can fix this problem in the Ukraine. I'm going to talk to Mr. Putin. I'm going to ask Mr. Putin to take his troops back to Moscow. If that happens, Trump will be hailed as a peacemaker. Somebody else will put him up for a second time for a
election or something.
No, he'll be put up again for the Nobel Prize, for the Nobel Peace Prize. They'll all hail him as a peacemaker. This will be great for his run after 2022. Things are insane at the moment at a government level, right? So it just wouldn't surprise me with that sort of stuff. So there's going to be a poster boy come up or poster girl as we go into 2026. So watch for that. That will take everybody's attention away from what they should be looking at. Yes, so that's the first thing to look for.
All right.
It's starting to get carried away with their own abilities, right? Which is sure to happen again. It'll be another.
It's not really it's not really an objective way to understand an end of a cycle. I did that with.
It only happens if you go into the extreme, right? So that's the first thing to be looking for. It isn't that objective, and you can't say it's not scientific and it's not economic.
You went to university to tell me that.
It's people's behaviour. So behaviour is likely to become a little bit more hedonistic as we go into the extreme.
That's what I heard of economics, study of the human behaviour or how we interact with the business.
Yeah, but to bring it into something a bit more less like that, a bit more realistic, you have to watch for the yield curve, which is the Fed rate versus the 10-year yield in the US, the long bond. You just watch the behaviour there. You'll be looking a year out, 6 months out. You'll be looking for a crossover where that's where it does matter how high interest rates go. The short.
Didn't we just have that now as well? Whatever it was, a year or two ago.
The curve is flattening. Yes, we did in 2019. Yes, it happened briefly. Nobody saw it.
I heard it all the time. It's got to crash. The yield curve got to crash.
Yeah. So you watch what the yield curve's doing, and if you don't know what that is, you need to study it. I put that up on my site for my members and stuff. We go through all that. It teaches you. That's pretty simple once you get it. You just got to watch for where the tallest buildings go.
And their date of completion?
Well, yes, their date of completion is one to watch, but you should also look out for some sort of announcement, 2025, 2026, where some very rich person decides that they want to build the biggest, grandest, most incredibly unbelievable structure.
Mhm.
So you could watch out for that. I'm not sure we'll get the tallest anymore.
Yeah.
The Chinese government have done what I think is a very positive thing. They've forbidden the building of tall buildings now. It's a very productive thing to do. Speculators don't like it, but it's long overdue. It's just getting stupid what was happening in China with how quickly and how high you could build things. Overbuilding, really. Chinese have stopped that, so it might not be the world's tallest anymore, but it'd be the biggest, grandest. I don't know. President Trump.
What was it last cycle? Just as a bit of an example for someone who hasn't been around.
The Burj Khalifa, and that was
Middle East.
In the Middle East, that was announced. I said to people when that was announced and started building it would open in a recession, which it did. The Middle East, they also announced, you might remember, the building of those, the Palm Jumeirah, was that what it was called?
That was the land that looks like all palms in the ocean or the sea there.
They built that into the sea, some astronomical price.
And the world, I know that's half sunk. They put all the map of the world in the sea.
Yeah. So there might be some sort of announcement like that comes through. I suspect though that it'll be something a bit less obvious now.
Mm-hmm.
It might be something in the crypto field. There might be some particular invention, or there might be some expansion in the crypto field. Somebody might come along and say, well, we can sell bits of houses, and we can use the architecture of what's been done with blockchain to say, well, prices have gone so high in some places in the US, people can't afford it. We might say that you can now own 1/6 of a house with the blockchain, and start selling off 6ths and other things like that. That announcement might push things right over the top. Something speculative it'll be. I don't know. President Trump, then, if he's back in, he might announce Trump Tower on the moon. I don't know.
Now we're just getting out there. I keep wanting to come back. I'm trying to put myself in the position of someone who still believes the cycle has to come to an end this year. We'll probably see a recession this year. Is that likely? No. Unlikely?
No, unlikely. No.
A technical recession?
No, no.
Bear market?
If we're talking stocks, you could see.
Yes.
We could see a bear market in stocks. Yes, that's
so technically a bear market is 20% drop from the all-time high. Was it in a particular period? I don't remember.
Well, as you know, Jason, every year I do a roadmap for people.
Yes.
For all the members, that's based on how time works. They've been pretty good the last.
They have been.
15 years I've been doing them. We used a roadmap to forecast the top at the end of 2019, very early 2020. The roadmap for 2022 in the stocks, US stocks, is telling us that markets are likely to go lower after March into June. So yes, I think that the Nasdaq
June, July, August, something around that, around third quarter, maybe a lower low than we just saw, maybe a higher low. Not sure yet.
A retrace of what we moved up from March 2020 up to last month's tops. It'll be a retrace, a third, a half, something like that. Nothing serious.
Right.
It's just markets go up, they go down. Markets can't go higher without retracing first. I wouldn't be able to. So
no recession in 2022. That's pretty clear. Yeah, that's 2 quarters of negative growth?
Yes. Unlikely.
Yeah. Very unlikely. All right.
Yep.
I've got questions about property, but I wanted to. Hyperinflation is always a big one, and I need to leave that one for a bit later. But what the hell? Hyperinflation, inflation. We have inflation, 7.5%. It's thrown out all the time about hyperinflation.
The US government and the Fed, they're not that stupid. They're just they never print so much to get hyperinflation. It's just not
going to happen.
No.
What about when the market crashes after 2026? Are we going to print even more, 10 times the amount of money to make us survive?
Well, you could, but at that particular time, because there's so much credit being decreated with the deflation of land prices. You could print as much as you want. If people don't go out and spend it because they think prices will be lower tomorrow than they are today, there's no way people spend money or buy houses. If people think houses are declining and that next month houses will be cheaper than this month, they stop buying. That's deflationary. It's not inflationary, and it's certainly not hyperinflation.
So no possibility of hyperinflation either.
No. You could get it in places, Turkey, Zimbabwe.
Not the US's, not the Australias, the Canadas, the UK's.
No. The Fed's just not that stupid. They're bright guys. They don't understand the cycle much, but they know what money's all about.
All right. So no recession in 2022. No hyperinflation after 2026. We could have the biggest boom and massive collapse in the world. Yeah. Can't see the hyperinflation happening.
No.
We'll have the biggest collapse ever.
It depends on what side of the market you're on. If you're into 2026, and there'll be people then that getting onto the property ladder because they'll be told it's a great time to be buying. They'll buy in. People who buy their first house and they're absolutely mortgaged to the hilt. For them, it's going to be a depression when house prices come down. For some banks that have lent too much money to the wrong people, it'll be a depression for them too. But if you've going into 2026, if you've remained reasonably conservative, if you're
not leveraged up too much,
if you're not leveraged too much, if you've got decent tenants and you don't owe significant amounts on all your properties, and you're cashed up and you're okay and you've organised things with your bank, it might be the best time in history.
So what I'm hearing now is no recession this year. This could be another fantastic opportunity to be investing again, to make use of this second stage of the cycle. Yes. But as we approach the end of the cycle, not to be over leveraged and just to remain as cool as possible, but things will get absolutely crazy.
Yes.
How can property prices continue to increase like they have done already? How do people continue to afford to buy? We always think they're overvalued now. Everything is like $1 million here in Australia. What suburb's not $1 million?
Well, you move to areas where you can afford, and if that means you can work.
Where does all this money keep coming from? Yeah.
Well, if you're in, have you heard of a place called Quilpie? I hear they're giving land for free at the moment.
I have, yeah.
Yeah, okay, probably a couple of 100 miles from where you are, right? It's inland. I don't know what they do in there, but the town council in Quilpie, I've heard they're giving land away for free, for nothing. So you just have to live there for 6 months.
I think you got to build on it and spend over 700 grand. Well, that's a different place I was looking at. You had to build a property on it.
Okay, well, if you can work from home completely, and you've got a great idea for an investment or whatever else it is, or you're working, take your family and move there if you wanted to. Prices get too high in town.
So these sort of questions are a bit, I don't want to, they're not stupid, definitely not stupid, but it's kind of hard for the average person to understand, how do these prices keep going up into this next stage of the market? If the interest rates are coming up, their prices are already too high. Where's this money coming from?
Well, it's just
who is buying the real estate?
Just look at what happened in prior cycles, mate. First up, I hate to say this for people listening in Australia, but sweet FA happens in Australia, right? From my perspective in Jakarta, when I stay in the UK or the US, Australia just doesn't get on the pages, yes, except for perhaps when a kangaroo comes into town or somebody.
Well, there's a fire.
Or there's major drama. It really doesn't matter what happens in Australia. It's what's happening in the US that you have to worry about, and prices haven't gone high enough. There's just plenty of opportunity.
So people could still afford properties over there. I guess they can just move to other towns. There's so many of them.
Americans are very mobile. They can move anywhere with their jobs. Texas is raging. It's not overly expensive. Parts of California are probably expensive, but there'll be some places that are. They come down a little bit, but generally, from what I'm hearing, it's not desperate over there yet. When it does get a little bit desperate, the politicians start feeling the heat. So they start thinking to themselves, wow, if my constituents are complaining because the houses are too expensive, they start dreaming up ways to assist them. And so governments will introduce first homeowner grant again, which they think helps first homeowner buyers. But as soon as the grant is introduced, as you know, if you understand the real estate cycle, if you understand
Yeah.
the realization of the rent, the land price just simply goes up as soon as the grant is introduced, right? They think they're helping because people get 25 grand or whatever it is straight into their pocket, but it doesn't. In the long run,
So
it pushes up prices more. Those sort of things are going to happen towards the end of the cycle. Yes, and so
that's another signal then. We haven't seen too much of that yet, and they do it around the world. Just call it some other sort of scheme.
Yeah, you can also you could get a state government comes in and they're thinking that house prices are unaffordable. So mistakenly, and usually it's it doesn't matter, Liberal or Labor, it doesn't matter. Some treasurer, some bright spark comes up and says, well, we need to make land prices affordable. We're going to abolish the pre-existing land tax. Now, if you happen to know, again, your law of economic rent, as soon as you abolish any existing land taxes, land price will go up by what the tax is withdrawn. And so, as we start to reach the extreme and house prices do start to get into the areas where people really start complaining, governments take action. And I can tell you 100% sure the action that the government takes will be wrong, it will be incorrect, and it will lead to even higher land prices, aka house prices. This is going to happen, absolutely as sure as eggs, because politicians want to get re-elected. Sometimes the politicians even know what they're introducing is wrong because the Treasury Department will tell them that if you get rid of the land tax, land prices will go up. But the politicians know that the average Joe and Jane, they don't get it, right? They don't know things. So they'll believe what they're being told. Wow, that's fantastic. My land tax is going to come down now. Means I can pay more, means I'm saving more money. I can go out and I'm getting a good deal from the government and I'll re-elect this guy because I think he's doing me good, right? That is going to happen. I don't know what sort of things government might dream up, but they'll certainly dream up something in the belief that they're helping people make their house more affordable to buy. Yes.
All right. Breaking the cycle and the economy in 2022. We've covered that a fair bit, but I'm looking at different ideas, questions of how the cycle could break. I'm sure we could get through a few of these. The first one is around the 18.6 year cycle. I think they're assuming that the cycle is more widely known now. Do you see it will break? So let's assume that a lot more people know about it. Will the cycle break at that point? Do you see it dissolving? Like, do you see the cycle dissolving as more awareness grows from it? We kind of, the other powers don't want it to happen.
I don't know, just because you all of a sudden become aware of it, you think everybody else does too.
Yeah.
I doubt it. I've had this before. I was asked that in 2005 and 2004. So people have been explaining for a bit. If you tell too many people, the cycle's not going to happen. Well, I said, can't see it. Can't see it.
We're basically taking on, if what you're saying is correct, the Rothschilds, the governments, everyone that has their vested interest in the economic system taught in universities. They don't want the economic rent to be known about it, and they don't want to tax the land. And even if they were happy for everyone to know, I guess like you said, the average Joe and Jane don't want their land taxed. They don't want their home.
The understanding level, I think now has become is and will become even worse. We're all on our phone.
What about with the distrust of the government? Is that growing, or is that just young people?
That just allows people to believe crap. I mean,
what? The distrust?
So people believe all sorts of wild and woolly conspiracy theories. Look what Trump was able to do. And so people start to act on that sort of stuff, and they don't begin to understand the really important stuff, right? And so not only that, the situation's worse now, I think, because we're all on I'm losing losing my words. What's the new phenomenon that everybody's on? All you see young kids
Cryptocurrency?
No,
TikTok?
TikTok. We're all on TikTok, right? So any loose few seconds that we get these days, you just open your app and you start looking at TikTok, right?
Right. So your attention is just getting drawn elsewhere, and there's no
Nobody's-
benefit in just keeping your attention on something else that's going to benefit you.
Nobody's learning. Nobody's studying and learning anymore what they should be learning. We all think we're smart and trying to follow.
But are
the
you
way
just an
because if
old
you-
codger that just thinks the world's getting worse? What is this talk, Phil?
I don't know. Maybe I'm becoming more of a grumpy old man. But what I'm saying is, whilst we're so busy, I'm doing this too.
Mhm.
Whilst we're so busy, days gone past it was Facebook. People are over Facebook now. We're now looking at all the TikTok stuff. It's diverting our attention. Yes.
Mhm.
So if you don't start worrying that too many people are going to know this, it's not going to happen. It's not going to happen.
Not going to happen. Not at least in our lifetimes. There's
Not
a
in
lot
the-
of barriers to overcome.
No, there's
Not in
just-
anyone's lifetimes.
There's just so much. There's just so much activity and stuff going on now that can take our attention away from what we really should be doing if you really want to understand the cycle. Yeah,
Cycle, can it end earlier?
I could. There's nothing to suggest that it has to do what it ought to. But if you've read my book or if you've seen my work for a while now, I just look at it to say the structure of the economy is still the same. We're still seeing the enclosure of the economic rent. We're still seeing banks creating as much credit as it can, which banks have to do because banks have to make money for their shareholders. They're always under pressure from their shareholders to increase the share price. So they increase the share price by lending more money or creating credit. All that activity is still the same as it's ever been. So whilst that continues, it's very difficult for me to say that the cycle's not going to complete. And Jason, you've been following me for years, and your brother and others as well. I get asked. I've had the same question for 20 years, and I keep saying, well, from what I can see, the behaviour is still the same.
Basically, the fundamental reasons for how the cycle is put together and what's happened, none of those things have changed. Therefore, there's no reason to expect the cycle to end earlier until we see any break in those fundamental reasons. Then it's going to continue on. It's not going to end. It's not going to crash in 2022. It's not going to crash in 2023. This is the big overall massive crash. Sure, we'll see maybe we'll see a 20% bear market in the stock market. Okay, but the land value is not going to happen. It's going to happen after 2026 because the fundamentals are still there.
Yes. History suggests at the moment that the price of land around the world is still basically affordable by workers and by business.
And that ticks a lot of people off, though. How can you say that? How can you say $1 million is still affordable?
Well, I had no problem remortgaging in the UK, which I did last year. It wasn't any big deal. Had a few hurdles to satisfy, but it wasn't too bad. As we go forward, as house prices continue to go up, there will be a slightly larger percentage of the population that can no longer afford it. This is clear. Yeah, probably right now there's a percentage of the population that can't afford it. When enough of those get together to start making an impact at the electoral cycle, and when politicians start hearing that, those local politicians will take their concern to Canberra, and whoever's
Let's say for the US, just
same,
broadly speaking, same.
They'll take their concern to government, and government will listen. The government in power wants to stay in power. They will introduce policies to assist those people at the moment who can't afford to buy their house. The policies that the government introduced to help these people will be policies that will, over time, make the condition worse. It never looks like it. That's because there's just simply not an understanding at an economic level to tell people that the policies that the government are introducing will in fact make things worse. Yes, and we'll get the wrong policies coming in as the cycle heats up.
Are there any signs that would indicate that the 18.6-year cycle is not going to be like others, shorter, longer, only to do with the fundamentals like we just said?
That's a good question. Yes, if interest rates go up too high, if the Fed has a dose of madness and just simply and keeps tightening, that would be problematic. So that's a possibility. I can't see that happening because if the Fed kept tightening from here, what do you think Mr. Biden's going to say? Mr. Biden's going to say, "Hey, people are starting to feel this. I might not get re-elected. You're handing the presidency to the Republicans." I think he's going to call the leader of the Fed, whom he appoints. Don't forget, he's going to call in him or her and say, "Hey, listen, I think you better stop lifting interest rates. This is insane now. It's getting a bit tight." Yes, this is all endogenous to the system, and the system doesn't allow itself to collapse like that. In writing my book, I'm sure you've heard me say this before, but for people who haven't heard it, the one thing I learned when writing my book over all of the history, and I wrote that between 1997 and 2005, then I had to search for the publisher. The one thing I learned, the real estate cycle in the United States, it just managed to find a way to complete. Whatever it had to do to complete, it did. On time, every time.
I can get that now because I've seen it for so many years. Yeah. Just saying that to someone who needs to look at interest rates and piece together all these different areas of the economy to come together, and just saying the cycle has to complete.
Yeah.
You know where I'm going with this. It's like, how do you explain that?
Yeah. I know. But that's just how I studied history. That's what I learned. That was my number one learning exercise. It's given me the backbone.
What could you relate that to in everyday life? I know it's the economy and people want to say that they can't piece these things together, but the world, the universe, it's all, things happen in cycles. What would you say? Maybe it's like the seasons. Doesn't matter what happens, whether we get cold, hot, this, that, the season has to complete.
Yeah.
Is that a fair enough comparison?
Yes. The inquiring mind of the population simply isn't there. The population as a whole, the empathetic levels of humanity at the moment, they're just not there to inquire into why all this is happening. And so whilst the inquiry rate and the ability to want to know why this is happening, there's not enough people asking that question, nothing's going to change.
Right. That's pretty fair.
Even if you do ask the question, if you ask the question in Russia, you'll be shot. If you ask that question in Turkey, Mr. Erdogan, he'll put you in jail. If you ask that question in the UK, or if you started demonstrating in the UK, you can't do that anymore. The police have the right to actually stop you. If you stand up in the US and suggest that, somebody's likely to have a gun and shoot you because they'll have an opposing point of view, or they'll call you a conspiracy theorist. If you stand up in Australia and do that, nobody's going to listen because they're all at the beach or they're all watching the cricket or football. If you stand up in New Zealand and do that, you probably wouldn't be understood.
What question are we asking here?
Why is this happening? Why are house prices so high? Why can't I afford them? Yes, the question. Nobody's asking these questions. They're not there.
They are asking them. Yeah.
Maybe some people are, but then you've got a media now that's owned by just 2 or 3 people. Only one person in Australia. There's only 3 or 4 worldwide that issue the news. If you want to imagine demonstrating now about trying to say America shouldn't go to war. It's just there's just always something to worry about these days, right? So it just isn't going to happen. Okay.
Yeah. I was going to get onto more war stuff, but it doesn't. Yeah, the war's not going to change it. There was a couple of questions around political unrest. How does it affect the cycle? Will it cause the cycle to end earlier? No, you mentioned earlier it's probably going to spur the cycle on.
You're asking good questions. Let me say one thing. with Russia, with their assembly of their army and tanks on the Ukraine border. I mean, this is nervous, right? It's a significant thing. It is something that you wouldn't want to get worse. Nobody wants to see skirmishes and then that get worse. If, for example, Russia goes into the Ukraine, we're talking possibilities, and I don't know if it'll happen or not. I don't have any inside information here. And let's say Mr. Xi in China decided to take advantage of this fact, and he then decided to invade Taiwan. Now that could be serious. That could raise the stakes quite substantially, and then Biden's going to have to look stronger than what he does at the moment. And let's say then Iran decided to take advantage of the situation and launched a few missiles at Israel or at Saudi Arabia, or things got a little bit out of hand that way, and then things could easily get crazy that way. That would put a stop to things. That probably it would be harder to get a loan. Probably things would get a little bit tighter. Money would be diverted from speculative activities. Government could then say, well, we can't have all people speculating. Some governments around the world could then say, well, perhaps houses should be to live in, not to buy and sell so dramatically. Things could tighten up that way, and we could get a complete cessation. This could happen. There's nothing to suggest it could happen. It might happen. Now that would be enough to bring the cycle to a halt, perhaps a little bit.
All right, we're going to some extremes here, trying to get all of these wars in different areas of the world to come together at the same time and create some sort of like decentralized war atmosphere.
This is nothing different to what happened at prior times in the cycle. It happened in 2001, 2002, 2003, when the US decided to go into the Middle East, right? And they decided that all the shenanigans that happened in Iraq. That was nervous times. It happened right throughout the 1980s. 1984, 1985, 1986, America was bombing Libya. They were bombing Tripoli. There was a really big stuff that happened in the Middle East. I remember that directly because my travel plans in 1985 and 1986 were directly affected because I wanted to be going through the Middle East. So I had to redraw things and do something else. They were nervous times. I can tell you, in the mid-1980s, people were seriously worried about things that might get out of hand, nuclear strikes. People were worried about what the Russians might do.
So yeah, it's happened before.
It's nothing
but because the people watching the news now, we're 20s, we're 30s, we're 40s, we don't have that experience, that awareness of what's emotional awareness of what's happened ingrained in us in that sense.
Nobody understands history. Absolutely nobody studies the history. If you did study the history, you'd be able to see through all the stuff that's going on at the moment. To me personally, I just find it laughable. It's just more stuff going on that I think government, in my opinion, I think governments or politicians deliberately create to keep us living in fear. Okay, I think the whole pandemic stuff was made far worse by the way governments reacted. It was farcical, the whole lockdown stuff. It has been shown. Professor Hankey, a good friend of mine, done some great study at the moment. He has conclusively shown that lockdowns don't work. He says they make absolutely no difference to what happens going forward. So why would you lock people down? One of the surefire ways, the best ways to get COVID is to stay at home. We should have had people out in the open air, exercising, doing stuff, meeting people out in the open. Sure, you didn't want to have people carooning in a nightclub or in getting very close together in a rave or something like that. That I understand. But the whole stuff of lockdowns, putting people at home, is just utter. Governments, I can tell you now, the other thing I learned with my book, right? Government policy makes things worse. It just is. It does. Okay, and I can tell you, going forward, government reaction, government policy will make things worse. The number one thing dictators want to do is keep their people in fear.
I don't think there's too many people that will disagree with governments are out there, media's out there to instill fear because it's the best way to control. Like that's proven.
And we can't do anything about it. Nobody can group together like that to actually do anything about it. So the cycle turns.
Biggest question marks in the future that could throw off the projections. Any question marks in the future?
Oh, World War. We don't.
World War.
Yes, we don't want stuff like that happening. We don't want some stupid dictator calling the shots, right? So, anything.
One world governments, all this sort of stuff.
Um,
Will that throw cycles off if that actually
no,
happens?
because if that happens, it's absolutely certain that we'll get even less questions.
Because it's government.
If there's one world government, we'd be under more control, and you'd have the people running the one world government buying up all the land, right, and wanting to keep us happy by having all of us plebs and you and me and everybody else not owning anything. Yeah, so they'd still be chasing themselves. That's no different to anything that's going on now.
I might do the politics and government questions in a sec because that's a good one. Is there anything we can do to change the cycle as we see it now? Can we group together?
Nobody wants to change it, so it's not going to happen.
No. All right.
We're
not there yet.
Once you buy a house, we all want it to go up.
That's true. So then we have vested interests. They want us to have vested interests in it.
Yeah.
All right.
And the people who have a lack of affordability, they're not a big voting bloc, really. It's the people getting my age that want to cash out their home. They don't want to see cheaper house prices.
No, definitely not. Not at that time. The Great Reset, is that going to change things? How will that affect the cycle? Owning land? Are we safe from...
What's the Great Reset?
The Great Reset, looking at 2030, was it the International Monetary Fund, IMF? One of the big money funds, the whole deal is to make everyone reset the economies, reset the worlds. You've heard...
It's all talk.
Yeah, I've done a butchering job of that, but you're saying it's all talk. You don't think this whole 2030 thing is going to happen?
No, it's all talk. No, because by 2030 they'll be too busy panicked about the downturn that's happened by then. The question will be saving the system. It won't be about the Great Reset.
Wouldn't that be saving the system? Do you need the Great Reset to save the system?
You don't save the system by resetting it. You save the system by propping it up, which is what they did.
Or reset it. We'll prop it up, reset it, become a one world government.
Look what happened in 2008, 2009 to the movement that was trying to get things
in the
reset.
GFC.
Nothing happened. It was just more of the same eventually. Banks were told.
So they're not coming after us and all of our stuff. You'll be happy. You'll own nothing and be happy?
No, I can't see any Great Reset happening like that.
No Great Reset. Okay, so no need to rush into golds and silvers. Create
not yet.
Your fortunes out in commodities.
Not yet.
Have your water and your food supply safe.
Well, I know there's an organisation I won't name that made an absolute fortune in 2011, 12, 13, telling Americans to buy a gun and bury it in the backyard and store all your cash there as well. Didn't do you very good, did it? You'd be much better off to buy stocks and land, huh?
So yeah, all that stuff's... Yeah.
What you should, I think you should be healthy. You should have a healthy dose of skepticism here.
Mm-hmm.
Whatever those people tell you, do the opposite, because that's probably what they're doing.
I don't know if they're doing the opposite. Some of them are very, they've given their life to this thing now, so they're doubling down on the Great Reset and to be prepared for what might happen after we get some sort of apocalyptic collapse. This might be a topic for another. Yeah, I don't think you're very interested in it, but it could be a topic for another video.
Move on.
Yep. All right. There's so much of that online. The Great Reset stuff.
Conspiracy theory, right? Don't go down the rabbit hole. Just focus on your investments and work out where the earnings are, and work out where the next piece of infrastructure is going in, where the government are building road, railway. There's plenty of that happening on the Gold Coast. Wherever the next railroad goes in, or the next long, what they call it, the tram routes and stuff. That's where.
I get the Great Reset. That takes a lot of pressure off. If someone's willing to accept that could be all BS, the whole Great Reset, and preparing for the worst, that can take a lot of load off your mind to be able to focus on more profitable ventures leading into this most profitable time.
This is nothing new. In the book, I go through all the early conspiracy theories. There was a big movement in the 1860s, 1870s in America Um,
1860s. Okay.
yes, in the 1870s, the people back then thought the Catholics were going to take over the White House. So they called themselves, I think, the Know Nothings. Because they thought there was a big conspiracy theory that was going to collapse the United States.
Wow.
It's nothing new, right? This is all. It's just all been done before. Okay.
Could the government confiscate assets at the end of the cycle?
Not in the US.
Not in the US. What if we turned into some communist regimes across, across our countries?
No.
With China taking over.
China's something you might. Yes, you wouldn't want to see China expanding too much. We've seen what the Chinese government does in Hong Kong. Yes, that.
Could they bankrupt the US? They have all the debt there and they own it, and then they come and.
This is not a question for the current cycle. It could be a question for the next cycle.
Okay, so stay tuned.
Yes, yeah. The Chinese becoming a creditor nation. They don't owe much to the rest of the world. That does and will put them in a position of strength. That is for the next cycle, not the current one.
All right. Health crisis has led to increased government powers. Financial crisis is next. Governments around the world are creating CBDCs, so central bank digital currencies, potentially giving them more power. What is your view on how the government will handle it in the next financial crisis, and if financial censorship is a real threat? So you're not about, this is actually from Michael, not about crypto, but what's the alternative solutions? So basically like financial censorship is kind of, what do you see happening?
What I could see happening there is the digital currencies and stuff. If the government's issue a digital currency, I think that would be bad for crypto. Government will want to control the digital sphere, which I think is coming. I think the digital sphere, digital currencies like that, may well actually be introduced the first time and may make themselves useful after 2026 as the downturn gets worse. The governments may find that a very convenient way to actually give everybody spending money. So they might.
That takes more power to them, because then there's no cash.
It'll depend on the government at the time. It probably won't change things very much. It just means that if we get a serious downturn after 2026, the way that you change that downturn is by increasing spending power. So the governments will borrow from the bank and they'll spend that money directly in the economy. The most convenient way a government would find to do that is to have everybody establish a electronic account or a digital account. And you could do that in Australia via your tax return number, perhaps, or something like that, because everybody's got one. And then once you get your digital
social security number for the US and whatever,
whatever it is, then the government will simply give you directly $500 US straight into your digital account. And
so the UBI comes in. How is this not the Great Reset? You're just pulling at
that would not be considered a UBI. It would probably be a 1 or 2 off payment. And
like they did in 2020.
This was done in the 1930s and other places. It's nothing new. The way to deliver it is new, but the idea isn't new. But the government would use that, of course, as a type of a digital currency. The government would use if you've got to establish your digital account to get the money. Everybody will do that. There'll probably be some sort of things like to think about, like say, for example, if you're on the National Gambling Register, the government could probably say, okay, well, if you're getting $500, you're not permitted to gamble it if you happen to have a gambling addiction. The government might also say, well, if it's going to the family directly, and the husband has a history of spending it badly, the government will say, well, we're only going to deliver it to the housewife who has to spend it on the children. You could get control issues like that happening. I suspect that the people would probably put up with that because it's a reasonable outcome. But again, you're going to have a loss of control of your individuality and the sort of things that you could and can't do.
There's more control.
Again, yes, a totalitarian government. I mean, they're probably doing this already. China and Russia and stuff. You could have a totalitarian government suggesting then that there are certain anti-government protesters that won't get that sort of money. We're not going to give it to you because you don't like our government or you don't like me. there's all sorts of questions that could come with that sort of stuff.
Yeah,
I
we're trying to
suspect,
predict the nuances of,
yes,
after a crash with what the information we have now. So
yes,
it's
but I suspect digital currencies and stuff will probably come to the fore after the crash because there'll be a convenient delivery mechanism to start getting people to spend again. And so the first
but how
thing to
would
do,
that why would that affect cryptos? I can see it affecting stable coins, which are essentially just a one-for-one peg for the particular fiat currency. But why
well,
would it affect something?
if the government introduces its own digital currency, it won't want any competitors. Government want control.
I mean, Bitcoin is its own thing, your digital gold, or Ethereum is like your digital internet.
Yep.
Obviously digital internet, but running on it. So
I
it's
wouldn't.
they're not in the same field,
No, I agree.
the same
I'm
technology.
not in the space where I could make a reasonable forecast of that because it just could go. It could go anyway. Somebody might have some new invention or some other way to use it. So I've got no idea. But
Fair enough.
again, in a downturn, and I've said this before, the things in a downturn that lose their value quickest are those things that have no earnings,
Mhm.
and and also often one of the first things that gets
Gold,
reacted.
silver,
Well, in a
there's no
downturn,
earnings.
often the first thing that happens is people sell the things they can get rid of quickest
Mhm.
because they've got debts to pay if the bank's calling in the loans. Okay, so you can work that one out from there. So whatever can be sold easiest often gets sold first to pay off the debts that you owe somewhere else.
Most liquid.
Yeah, the most liquid history tells you that's often gold or silver, and next downturn could be crypto.
But then the last cycle we saw gold and silver head up into 2011.
Yes, that's
That was its boom.
Mining that had to do with China and the mining stuff.
So looking forward to the next cycle, we might not even see gold and silver.
Well, could be. Remember, every cycle's different. It can never happen in the same way. It's the same but different. It's based on the cause is the same. The downturn, what causes the downturn is always the same. It's land price gone too high and the banks have created too much credit on the high land value. It's always the same. But they start differently, they manifest differently. There's always different issues. And the crisis always comes in the area that's new, least understood, and the weak point. And what that is, I've got no idea. I don't think anybody will ever forecast it because if we knew what the weak point was, somebody would act to make it less weak.
Mm-hmm.
Yeah, hard to say.
Gold, silver, not a great store of value. I mean, we could see that from the last 40 years, but is that somewhere where you'd put wealth as a diversification?
If it starts making new highs, you'd have to look at it. If it goes above 2100, something like that, then it's game on. That's all-time new highs.
That's for gold. You're saying 2100 an ounce.
Yeah, in US dollars.
Yeah. All right.
If it does, then you'd have to look at it. Then it's in play.
Does it have anything to do with... No, I was looking at Gann's financial table, but there was a question on that. How accurate is Gann's financial table? Moving on to a few Gann questions.
That's the best crystal ball I've got. There's nothing better.
Gann's financial timetable.
Is
it off a little bit?
No.
2020? No?
If you've got Gann's
have you not
you've got Gann's original, it's off. I've updated it.
Phil has updated Gann's financial timetable. Gann did this in 1909, I think.
Yes.
Yep. Forecasting the ups and the downs, and it sort of laid out until about 1950. So he was on track for about 40 years, and I think it got slightly off track.
Timetable, his hand-drawn one-page timetable got slightly out because he had to do a physical layout every 18, 19 years in different columns.
Written.
Over 100 years, 18.6 exactly. It just gets slightly out. Year and a half had to be slightly adjusted. Damn good thing.
I'll put a picture of it.
Unbelievable.
All right.
We should.
We won't. Yeah.
We should do another. I got to go soon, but we should do another. We should do another session purely on Gann for people if they're related to. If they want to know a bit more about it.
More than happy to. I'll have to name it something that people will watch, otherwise they'll miss out on all the good info. But
reading a chart, very easy to do. Good. But again,
I've only got a few more. Sorry.
Yeah. Sure.
I want to know about your investment strategies. a few crypto related questions, how we can use info. So nothing too deep from here, but just to get a bit of an idea of what you're doing. One more again question, quick if we can. War cycles, I believe we're in a war period at the moment. 39. So 1939 to 1945 was the previous, so about 84 years. Hence
84.
the riots, protests, trade wars, unrest. War has been the only event to buck the cycle. From your study of Gann, history wars, what is your view on the current war period we're currently in, its potential effects on the cycle and the aftermath? So even have you read The Fourth Turning?
Yeah, it's interesting stuff, but again, don't let your fears run away with you. It never manifests the way people think.
Exactly. Yeah.
More than likely, I think the war that people are talking about from a US point of view would not surprise me if it's civil. Okay, you simply get a completely divided US, which is already happening, and the war just becomes completely civil. You'll get a complete divide, particularly if Trump got back in. I think that would be a disaster from a US perspective internally, and you get a real divide. You could see, really been thinking out there hypothetical stuff. You could see perhaps a few blue states, California and one or two other states, just might start to raise the question of seceding. That's war from regards of a US cycle, and that would be going back 2 cycles back to 1861, which was war. I don't know. It's hard to say, and it wouldn't be physical as such, so it might be more cyber than anything else, and that would be just as much damage, but in a cyber sense rather than physical nuclear sort of thing. So it could be space related too. It's too hypothetical. I couldn't get into that, but I do know if with an 84 year cycle, if you go back and look at that, 1940s, 1860s, and the 1790s, the cycle's there, so it's coming up. That's due for 2028, 2030, and the possibility is if land prices really do turn down and we get a really tough cycle, that creates the ability for revolution because people get turfed out of their houses and banks foreclose and people don't like it, and we could get a really serious, nasty event, right? And that could lead to more serious stuff happening. If the US was having trouble, you could get Russia and China take advantage of the situation. I don't know. Hypothetical at the moment, but it's not due yet. It's due after 2026. No
problem. We'll continue on that. We've got plenty of time. Previous cycle, just looking at a couple of crypto questions. 1991, 2000, happy to be corrected. That was kind of the previous cycle. Saw the birth of the internet and the eventual .com bubble pop, which was not broken. So the NASDAQ didn't break the top of the cycle. So, we had that big boom. The NASDAQ boomed. Yeah, the NASDAQ didn't come up and break its peak that it hit in the .com. So it's about Bitcoin. If we're in the middle here, do you think Bitcoin will make it back to new all-time highs if we're still in this part of the cycle?
If the rest of the cycle heats up and get a really good runaway land boom, there's no reason why Bitcoin couldn't lead that. No reason at all.
Speculative, people gambling on art, collectibles, Bitcoin. Everything. Okay. The new latest thing. What sort of effect will DeFi have on the banking system? Decentralized finance, is that going to come into play in the cycle? It's still too young. Well,
I would urge people with these questions to go back and read my banking chapters in the book. Every single real estate cycle, banks get the ability to introduce new technology that allows them to save costs, reduce their cost base, close more branches, and create more credit. So anything that happens, it will just allow banks to create more credit. That's great for the cycle. Just pushes land price higher.
Easy crypto questions. I think we could do more crypto questions in the future, so I'll leave it open for some guys and get on with. I want to know about your investment strategy. What's your trading, investing style, time frame, short term, long term?
Real estate's long term. I buy. I've never been a big seller. Stock market. I do run a fund these days. It's with Tim in Adelaide. People can email in if they want to know about the fund. Just trying to take advantage of the second half of the cycle. So we don't have tech stocks. We're into banks and real estate. And as you can see, the banks are starting to make new highs.
And that's how you're investing in 2022 and the remainder of
Yeah.
this cycle?
Yeah.
Banks,
I'm
real
half in,
estate,
half in cash at the moment as far as the stock market's concerned. I think
because they're expecting a little bit lower.
yeah, and I'd like to see a few stocks make some lows. But again, there's a few mining stocks making decent new highs. So if they make new highs, I buy in. Pretty simple.
Yeah. That's kind of your criteria for determining where to go.
Yeah.
New highs, that's a Gann rule. Okay.
Yeah.
Do you buy and hold this stuff forever, or do you sell out at peaks?
Not in the stock
What about
market.
property?
Things have their cycles. No.
All right. So trading the swings in the stock market, but in property?
Just hold. Why sell?
Just hodl. No, they say just hodl.
Just hold. Yeah, hold. Whatever it is. Yeah.
Do you own Bitcoin?
No, I don't.
Will you ever buy some Bitcoin?
Not now. I look back. Obviously, I had the chance. My co-investor, he bought some. I think the price was about $100 when he got in, something like that. I think he still got them. He didn't buy many. He spent a couple of grand.
That's enough.
He teases me from time to time. I look back and obviously I say to myself, well, I should have bought some. At the time, though, back then, you couldn't get out. It was very hard to get out. You bought, and that was about it, really. It wasn't so easy. And they weren't the markets. They weren't the diversified stuff you've all got now. No, I'm not likely to. I'm not likely to. I might look at it to trade, but I'm not likely to
big returns coming. I'm telling you, big returns.
Yeah, if the cycle heats up, I can certainly see Bitcoin leading that. No problem at all.
The chart also works really well to Gann analysis.
I'm sure it does. It must.
You'll love it.
Yes, I do look at that. Yes.
We've covered heaps today. In terms of the information, how do we use it to our advantage when we're looking at the cycle? So, if we can encapsulate everything we looked at today, essentially no recession in 2022. We're going up into 2026. If there is this big boom period, is it too late to speculate on land prices right now?
Just get in.
No?
It depends, though.
Not financial advice?
I can't understand everybody's personal position, so that doesn't permit me to give financial advice, and I don't. However, having said that, I always think, I think it's fair to say, I think everybody should own their own home. And if you don't own your own home at the moment, I think you should behave as such to go out and make sure you do. I just think that's common sense, right?
Depending on what stage you're in. Like I'm thinking of, I'd rather invest and get the tax benefits from having the rentals, and then I can use that rent money to go and live in something else, and you get all the tax benefits rather than living in your own property.
Yeah, you can. You preempted me a little bit. Yes, you can.
Okay, sorry.
You can live your rent to live and invest to buy. There's no problem with that. Just own something.
Same. Gotcha.
In the market, right? Yeah, so it's yours, right? And I think you shouldn't be heavily with at least one property you've got. You should not be heavily leveraged on it, so that the bank can never take it off you, whether you're renting it out or whether you're in it yourself. Yes, You should always have that covered.
So towards the end of the cycle, make sure you're not like 80% in debt or any more than that. You want the growth of that property has to be good, high enough. Otherwise, you want to sort of start settling down to.
Make sure you own it and nobody can take it off you. Yes,
right.
Because you've got to have security for peace of mind. That's always step number one.
All right. Yeah, no, definitely. So if you've got peace of mind, that allows you it frees you up to go and do other things as well.
Yes.
What if there is? That's probably a good one to lead on to other stuff. If there's one key thing you want us to know, what would it be? Say for finance, one for lifestyle. Key thing.
Understand the real estate cycle. It will bring you peace of mind in your investment strategy. Because you can see through politics, you can see through the system, and you'll be able to see when somebody just doesn't know what they're talking about. So you don't need to follow their advice.
They might be thinking about us here. If they've watched 2 hours, then they probably won't be saying that, but could be us. One key lifestyle advice. You seem to live a pretty good life going between Jakarta, France, UK.
Yeah. Oh, I don't know.
On the spot.
Hard to say. Find a good partner.
Find a good partner. True. What's the worst mistake you think new investors make?
Listening to other people.
So what do you do then? You got to listen to yourself, but you have no experience.
Learn. So understand the real estate cycle, and if you're going to put your money in the stock market, understand that the best way to make $1 million in the stock market is to start with 2 million. Right? So stock market, take your money if you don't know what you're doing. So get educated.
Crypto's even better. Start with 10 million if you want to make $1 million in crypto.
Just get educated. That's all. And trade with money. Trade with something you can afford to lose in the beginning. Yes, certainly.
Age old wisdom.
Yeah.
Any other resources you recommend to learn more about the 18.6 year cycle? We have
the
book, which I'll leave.
Yeah, the website.
Yeah, and I'm going to leave the link to the website
and Fred
in
Harrison.
the description.
Fred Harrison.
Fred Harrison.
Yes.
Who is also on Twitter as well. He's still alive and he is Call on the Market.
Have a look at my archives page. All right, on Property Share Market Economics, the website.
I'll leave a link to it in the description for the books.
Really good articles there. Just go back a number of years and read it.
So, and is that the best place to keep up to date with you?
Yeah.
Property Share Market Economics?
Yeah. Yes.
All right. Do you plan to bring out another update edition of this book? This is at 2010, so this goes through the GFC.
Maybe.
Come on, Phil.
In a year or two, I'm going dark. Okay, I'm going to stop making any public announcements, and I'm going to trade the shit out of the market. Okay, in a year or two, you won't hear from me anymore. I won't be telling anything in public. I won't be giving any suggestions. I'm going to close membership of the site. So if you're not already in, you won't get in. Probably it'll be pulled down. I don't know what I'll do exactly. And then we're going to trade. Then we're going to trade. Just devote get right serious stuff. Right?
These are the trading groups that everyone dreams to be a part of, and it's all through crypto. So get in, you make the money while the market's hot, and then you go away on holidays.
Yeah.
That's it. You're going dark. End of 2023, we won't hear from Phil Anderson anymore.
Yeah, exactly. Soon.
Don't do it to us, Phil. We need you. We need you here.
We'll see.
All right. Any last words?
No, gotta go.
Links are all in the description down below. Property Share Market Economics, Twitter. The book is down there. Get in before Phil goes dark. He's off the face of the earth. Thanks very much for your time. Stay here before I need to hit the end button. But thanks to everyone else. Like it, subscribe to the channel. You got all their details down below. I'll see you guys at the next video. Thanks again. Cheers.